think we have a combination of a growth scare and a Fed policy scare. So in other words, we went from months and months of when's the Fed going to ease and how much are they going to ease this year and next, to one where growth is plunging and the Fed is behind the curve. So we've had a change in attitude. It's been based on some weakening data, but certainly the big report on Friday. So in our opinion, is the economy slowing? Yes. Is there any need for an emergency Fed cut? Doesn't look like it in our opinion. What you had, for one thing, is stocks that were certainly in technology and communication services sectors. They were highly overvalued in our opinion. So I think you're just coming back to some more reasonable valuations. I think that what you're going to see in coming weeks is data, whether it's earnings, whether it's economic data that says, yes, the economy is slowing, the labor market's weakening, but they're not weakening or slowing substantially. So this looks a little bit overdone in our opinion. And so we're looking for buying opportunities here. Well, I think a number of them were priced for perfection. And when you talk about artificial intelligence, which most of them were tied to in one way or the other, there's very few companies that can really monetize artificial intelligence right now. And as we've heard in some earnings reports, a lot of these companies, the Magnificent Seven and companies beyond that, they're spending a lot of money on artificial intelligence, but the payoff is a little bit further down the road. So I think there's a broad array of companies that are eventually going to make money in artificial intelligence, but for right now, it's very narrow, and it's just the biggest few companies in the Magnificent Seven, much less those that are out of it. It's very few companies that are able to make money now in artificial intelligence. You're probably in for a run of sub 2% quarters. Let's say the next 3 or maybe even 4 quarters might show GDP growth in the US less than 2%, but that's not the end of the world. That's modest growth. We don't expect that recession, and we expect better things in the global economy and the US economy after we see some rate cuts from the Fed. And have that trickle through the economy, and rate cuts from other central banks around the world as well. Well, I think if your view of stocks, if your time frame is 2, 3+ years, you need to be looking for spots to buy stocks here, not looking for reasons to sell stocks. So look at pullbacks when time is on your side as an opportunity. Have a plan, and when you get the opportunity, you need to do the hardest thing, which is to step in, execute the plan, and buy stocks when people are afraid.